right, traders, I'm going to be preparing you to trade the best setups at the best prices. We're going to be doing an in-depth price action analysis on the SPY, going over the key make it or break it levels. Say this level reacts as a resistance level, you're going to want to scalp put options to the next level that I give you. Say this level reacts as a support level, you're going to want to scalp call options with caution in this bear market to the next level that I give you. I am going to show you how to trade the best setups at the best prices. We are also going to be going over the top option plays on my radar, including Tesla, Snow, Netflix, Roku, Limit. I'm going to be going over some top stocks that I'm watching. So we'll get straight into that. So with that being said, this is what you need to understand about the SPY. We are in a battle zone. The SPY had a gap close reversal twice today, back-to-back gap close reversals. As you can see, we had a small gap down here, meaning SPY opened up lower than it previously closed. It went back up to fill the gap. Right here, it formed lower highs, reacted as a resistance, lower high reacted as a resistance, lower highs reacted as a resistance. Once the gap filled, it turned bearish. It had a gap fill reversal, a gap close reversal, GCR, previous closing price reversal, and then it sold off very hard. When did the SPY start to bottom out? The SPY bottomed out once it filled the second gap. This was the second reversal it had based off of the gap close reversal levels at 366.82. Once the gap filled, it started to have a reversal, and then it even trended up during after hours. Now it is currently selling off. You know, this had a nice little spike during after hours right here, but it is selling off right now. It's at $367.20. It closed at $368.50. We are on track to gap down tomorrow. So with that being said, this is what I need you to understand about the SPY. I'm going to show you how to determine if tomorrow is going to be a super bullish day or a super bearish day. Based off of how things are looking, it's looking super bearish, but it doesn't matter how things look right now. What matters is towards that market open within the first 30 minutes, how it's going to react to what I'm about to say. So listen up. This is the key. I'm going to disable extended hours just so you can visually see what it is that we're looking at and what it is that we're talking about in the battle zone that we are in. So you need to understand what the SPY is doing. So the SPY has been gapping up, and as it's been gapping up, it's been selling off. Right here it gaps up, it sells off hard. Right here it gaps up, it starts to sell off intraday. Right here it gaps up, it sells off intraday, right? So based off of what we're seeing, right now it's gapping down, and based off of history repeating itself in terms of the micro price action, the SPY had a small gap down today, and it went back up to the previous closing price. And once that previous closing price goes green to red and reacts as a resistance level, that is your confirmation to play puts. So what I'm telling you is, if this gaps down tomorrow, you want to wait for it to go to 368.50 and then wait for it to go red. Wait for it to go from green to red. If you see it reacting as a roof, reacting as a resistance level, forming lower highs, forming top wicks, very simple confirmation, right? So what's a good confirmation? Well, right here, it hits the previous closing price, it's breaking out. No reason to buy puts. It bottoms at the previous closing price, it bounces. No reason to buy puts. Okay, this is starting to show some backside. It's selling off. It goes green to red. It's turning the previous closing price into a roof, into a resistance level, not into a support level. It is forming lower highs. When you see it go green to red and react as a resistance and it sells off, do not buy puts into the sell-off. This is your bearish confirmation. Your bearish confirmation is it's forming lower highs. It's forming a roof at the previous closing price, and it is dropping. When you see that occur, do not buy the put options. Wait for it to spike back up and buy the put options on a green candle so you get the best entry possible. So I'm telling you, wait for confirmation first, let it drop a little bit, and when it rips back up, buy the puts into the rip so you get the best entry. And instead of buying put options right here at the lows, you're getting in right here at the top, and then it sells off, right? And if it doesn't sell off, then you get stopped out a little bit higher. Big deal. You're getting a much better entry. Would you rather buy puts here and have your risk right here, or would you rather buy puts at the top and then risk right here where your entry is better, making your risk to reward better, right? It makes everything better. Wait for the confirmation, then get the best entry when it spikes. Do not be scared of buying put options as it's spiking if it's confirmed bearish. The confirmation of confirmed bearish is it went green to red, it's reacting as a resistance, it's dropping. So if we get a quick spike back up, buy the puts where these people are getting stopped out. That's how you want to do it. And do that at 368.50. So I just showed you what it is to look for and what confirmation to look for. If that occurs, then it'll be super bearish. Now, if we start breaking above 369, it's going to start to flip bullish. So for the bulls to remain in control for tomorrow, what would need to occur is you would need to see 368.50 react to support, and you would need to see a strong break above 369. If you see a strong break above 369, it'll be on track to go to 371. Honestly, I'm not too interested in calls for tomorrow. It's looking overall bearish. I'm just going to focus on my put idea. And if I get the confirmation and the reaction I'm looking for, then I'll play it. If I don't get the confirmation reaction that I'm looking for, then I will not play it. So for bulls to take control, it has to break above 368.50. It needs to break strong to past 369. If that occurs, then it will go to 371, right? That's the next level. If it goes above that, then it goes to 372.50. If it goes above that, then it goes to 375. Heading into tomorrow, I'm not too bullish. I'm really not. Because based off of history repeating itself and based off of the patterns, SPY had a small gap down. It filled the gap. Once it turned the previous closing price into resistance, went green to red, it sold off hard to fill the gap. If you look at the pattern in the trend recognition, the same thing can happen. The same exact thing can happen. SPY has a gap to fill below at 357.63. Throughout the past days, there's been so much money put into put options, put into SPY put options, put into QQQ put options. A lot of people are going heavy on November 18th put options. Someone purchased over $33 million worth of triple Q put options. With that being said, based off of this pattern that I'm seeing, SPY is currently gapping down. If it gaps down, we wait for the previous closing price to turn into resistance. If it doesn't turn into resistance, we don't buy puts. If it turns into resistance, it forms lower highs, we buy the puts. When it spikes back up a little bit. And based off of that pattern, it sells off hard and it fills the gap. And if you look right here, there's a gap to fill below at 357.63. So your best price for call options is going to be 357.63. Save these levels. When it drops to this level, you're going to want to look to scalp calls. If it goes below, wait for it to rise back up, form some support, and then buy the calls into the dip. That's what you want to do. Wait for the bullish confirmation, right? So call options, you want to be buying low, 357.63. Put options, what you need to understand is right now, the SPY hit some major resistance. We have a lot of resistance right here at $373. 373 to like 375, 378. As you can see right here, it hit 373 and it sold off very hard within 2 days all the way down to 357, right? And the SPY has a gap to fill below at 356. History starting to align. Things are starting to look a little bearish. So pay attention to those patterns, to that trend recognition, right? You can just visually see, just look at where we're at. We're at major resistance, big downside potential. That's where we're currently at within the markets, right? So now what you need to understand is we'll go super bearish as long as the previous closing price reacts as a resistance level. And then the key breakdown is, this is basically the only hope. I want you to think of a SPY right now as it's hanging on by a thread. I want you to think of SPY with this whole pattern and history repeating itself. It's hanging up by a thread and it's held up on thin air. There's not much support. It's held up on thin air. There's a gap to fill below. What truly needs to happen is 368.50 needs to react as a resistance level tomorrow. If you see it react as resistance forming lower highs, scalp the puts. And then all we really have to do, in my opinion, from there is to just go super fucking bearish is just to do this. We just need to go under this previous closing price. We need to go under 366.82, see a little pullback, and then form some lower highs. Turn this level into resistance, and it is game fucking over for the bulls for the micro. That is what the bears need. The bears need to trade in between this range. They need to trade in between like this. 368.50, 360.90, form their resistance. If they can do that, they'll be on track to crack 366.82. Once that cracks, it's going to be a bloodbath. There's no support. It's held up on thin air. There's a gap to fill below. Another key level I want you to pay attention to is this right here. This is what we call a gap breakdown. This $364. Once 364 cracks, there is no support. There is just a gap to fill below at 357.63. This will be a great key breakdown to watch. If you see this react as a resistance, it's breaking down. Super bearish, play the puts, right? So those are my key levels. just to break things down, bears need to stay below 369. They need to turn previous closing price 368.50 into resistance. If that occurs, we should be on track to crack 366.82. And once that cracks, it's a bloodbath to 364. If 364 can break down, react as a resistance, super bearish, gonna start to fill this gap towards 357.63. The best price to scalp call options is at 357.63. Based off the levels and the price action analysis, call options just aren't the attractive thing to be doing based off of the pattern and the history that I'm seeing. That does not mean that this, cannot break above 369 and go bullish and go a lot higher. That doesn't mean that. I'm just saying it's not the attractive thing to be doing. So I'm looking for bearish reactions at my key levels. And if I get them, I will take my trades. If they hit my key levels, but it's, not reacting bearish, it's forming support, it's breaking out, then I'm not going to blindly trade solely based off of a level. And that means history is not going to repeat itself for the time being. So I'm going to stay away from puts. And that doesn't mean I'm going to buy calls just because it looks bullish, because entry does matter. The prices do matter, and calls just aren't attractive to me heading into tomorrow as we're on track to have a gap down and studying this pattern where it gaps down, it fills the gap, it has a reversal, goes back down to fill the next gap, gaps down, fills the gap. If it, forms bearish confirmations, go green to red, goes back down to fill this gap. It's just not fucking attractive to be in calls right now. That's just my opinion, right? Now, at the end of the day, if it reacts bullish at those levels, then it's bullish. But if you just look at this channel, it's trying so hard to break down. It's trying so hard. I mean, just look at this overall range. This is what you really want to be focusing on, is this overall range right here. This resistance you could see right here. I mean, based off of like how we're looking, it's just not looking that bright. You have a lot of resistance with big downside potential at 370. This is massive downside potential. It went from 370 all the way down to 357. The bulls are doing nothing but forming lower highs, gapping down, and filling these gaps below. Lower highs. It's not turning 370 into support. It's selling off during after hours. It's on track to gap down like it did today. If it fills that gap and reacts as a resistance level, expect the history of today to repeat itself. And that's where, just look at the history. This is where the bloodbath hits. I'm telling you, the bloodbath hits at this 366.60 level. Under 366.60, look at this. It goes from 366.60 all the way down to 360 and even lower to 357. And there's a gap to fill below at 357, right? So the number one trade idea is, if the SPY gaps down, if you see it reacts bearish at 368.50, it goes green to red. It's forming the lower highs. Like I showed you some confirmations, right? Look for the top wicks, look for the lower highs, look for it to, flip green to red, wait for it to spike back up a little bit, buy the put options into the spike, right? If that occurs, buy the put options. Under 366.82, super bearish, gets crushed to 364. If that reacts as a resistance, it goes back down to fill this gap below, right? That's the game plan. I'm keeping things super stupid simple for tomorrow, and that's what I'm focused on, right? For the bulls, in my opinion, to truly remain bullish, what would need to happen is they would need to break above 370. 370 is major resistance with big downside potential, and there's a gap to fill below. If they cannot push above this, it's going to be a blood fucking bath. That's what it's going to be, right? So for me to be convinced bullish, they need to break above 370. They need to turn that into support. If that can occur, then it's going to try to rally its way back up to 375. I do also want to mention there's a lot of people going heavy on November 18th put options. A few days ago, someone put over $33 million into triple Q put options. A lot of people are going heavy on this November 18th expiration for put options. With that being said, I have been waiting for a swing trading opportunity to buy puts on SPY. I like the expiration November 18th, but in terms of confirmation based off the daily chart and what it is that I'm seeing based on the daily, I think it's too early to consider entering that swing trade based off of what I'm seeing. So swing trading wise, I'm interested, but it could be too early. And I don't think it's 100% confirmed bearish in terms of this swing trading idea. I think it could be a little bit too soon. So what I'm doing is I'm waiting for confirmation. I believe by Friday into early next week, I will have my confirmation and I will know whether it's going to be another bearish rally for the micro and just gets absolutely crushed back down to 52-week lows, Or if this really starts to rocket above 375, it starts to rally back up to fill the gap at 390 or even 410. I believe I will have a better sense of direction on that. Because I am interested in put options for November 18th. I like the idea. I just believe it's not as confirmed yet for me. And it could be a little bit too early. So I think by Friday, early next week, I will let you know some of the confirmations I'll be looking for is consolidation towards resistance, failing to break out, lower highs, bearish candlestick on daily, the very simple confirmations I use that are not formed and confirmed until the market close. I only enter swing trades right before the market is closed. It's based off a daily candlestick, right? So based off my confirmations, what that's telling me, based off of where is this going to be within the next couple of weeks, I think it's too early to say. It could go either way, in my opinion. Based off tomorrow, though, super fucking bearish. But based off of, a few weeks from now, it could still rally to the upside. But I'm not convinced bullish or bearish. Overall, I'm bearish, but I think it can be too early to be bearish. So I'm just waiting for confirmation. I like the idea of November 18th, but it could be way too early still. So I'm waiting for confirmation. That's where I'm at on that. I'll keep you updated on the swing trading idea. I explained to you in terms of some things that I'm looking for: consolidation, stagnant towards the highs, failing to break out, lower highs, bearish candlesticks on daily at key resistance. Those are some things that I'll be looking for. Rushing into puts this early, though, isn't the most attractive thing in terms of the swing trade for November 18th. I'm speaking on, something where we hold this fucker for a bit. So I'll know, I think, by Friday into early next week. I really want to pull the trigger on that, but I need my confirmation, right? Because I don't want to get stuck in something like this where it's just like, having this little micro pullback and then it just rallies higher and it sells right back off before expiration. That is one possibility where it does crash, but it rallies higher first, maybe to 390 or maybe to 400, and then it sells straight back off to our initial entry right before expiration. That's one possibility. Another possibility is this dumps to 357, which is make or break, right? I mean, swing trading November 18 puts are not the most attractive thing to be doing right now, in my opinion, because we're likely going to see a bounce at the gap. We're likely going to see a bounce at this 357.63, right? So if you're entering a November 18 put and you're not taking profits here, I don't think it's the most attractive thing to really be doing. I think it's a little bit too early and a little bit less confirmed. But some things that I do want to point out, and again, I'll know by Friday. Just know I'm super fucking bearish for tomorrow. But another thing, look at this. The gap close reversals have been off the fucking charts with SPY. There was a gap to fill at 373.20 right here. Fills the gap, has a reversal, goes back down to fill the gap. There was a gap to fill at 371, fills the gap, goes back down to fill the next gap, right? This pattern, SPY has been consistently having gap close reversals. Do not sleep on these levels. 368.50 and 357.63. There was a gap to fill here. SPY filled the gap, had a reversal, went back down to fill the gap. There was a gap right here. SPY filled the gap, had a reversal, went back up. There was a gap right here. SPY filled the gap, went back down to fill the gap, right? Do not sleep on 368.50 puts, gap close reversal, and 357.63 calls, gap close reversal. Those are the best fucking plays. So, yeah, that's how you trade the best setup as prices in terms of trades that were made today. Tesla. I ended up shorting Tesla. The way that I ended up shorting Tesla was not by actually shorting Tesla. I bought this inverse. This is the inverse of Tesla, basically. Tesla Q, TSLQ. I ended up buying 2,000 shares of this right before the market closed. My average was at $49.60. It had a small little drop during after hours, and then it rocketed. And I sold this at 53. I sold this at $52.90, literally at the peak right here at 4:06 p.m. I literally sold this at the peak. Now it's worth $54. That was a crazy play, man. I mean, just look at Tesla, man. It's at $208. So why did I decide to basically short Tesla right before earnings? What made me do that? There was a couple of reasons. I was seeing a pattern on the daily where it looked bearish. And I understand people could say, like, at the end of the day, it's earnings, anything can happen, it's a YOLO. Yeah, but I am willing to make certain earnings trades based off the daily chart. I'm willing to do it. I know to some people that doesn't make sense, but in certain situations, I'm willing to base a earnings trade solely based off of the chart. And that was one of the main reasons why I decided to do that. I was seeing a bearish pattern within the overall chart. Basically what I was seeing was this. See how it has this strong move up. It has this strong move up. Next day, it's just overall sells off, overall sells off. That's the overall pattern that I was seeing. It just wasn't looking bullish. Let me show you another one, right? So that was one pattern. This is the other pattern right here. You have this green day right here. So you have this green day right here. You have this green day right here. You have this red. You have this red. And then what does it start to do? It sells off. Those were some reasons why I was bearish. Overall, it was also turning previous support into resistance, which is overall bearish. Another reason was, if you looked at Elon Musk's tweet, he was basically giving the vibe and impression that this was going to have a short-term drop. Reading his tweet, if you just look at what he tweeted before earnings, it was around like 2:43 p.m., something like that. It was basically giving the vibe that a pullback was coming. If you interpret it that way, that's how I interpreted it. He was basically saying like, I'm not going to let you down, blah, blah, blah. Like it wasn't looking good for the short term. It was one of those tweets where it just felt like he thinks it's going to drop for the short term, but in the long term, it will recover, obviously. That's the vibe that I got off of that tweet. So that was another reason. But yeah, that absolutely banked, man. I had 2,000 shares of that at 49.60 and I sold it at 52.90. That was a crazy play. Big shout out to Dimitri, who alerted that within the chat room as well. Big shout out to Stanimal, who alerted his thesis on Tesla. He was expecting it to crash and then recover, and we saw the crash and we saw the recovery. It did have a nice little recovery at some point. I didn't trade any options on this because IV was super high and I was expecting it to be choppy and recover, basically expecting both calls and puts to get fucked. That's the reason why I didn't YOLO on any earnings. Plus, in terms of earnings plays, you got to be extremely careful. There's extremely high risk with options. Sometimes I'll just do shares if I think it's going to be a major move. I also wasn't expecting a major move. So that's another reason why I didn't do options. If I'm expecting a major move, I'll do options. And it's got to be a one-sided move. I was expecting a crash and then a recovery, and we did get that recovery. There was a gap to fill on Tesla at 205. Once Tesla filled the gap during extended hours, it had a nice recovery, which was an opportunity to, scalp some shares. You could have scalped shares right here. It hit 206, and then it rocketed all the way to 218. Now it's right back down to fill the gap. So I'm going to be very fucking blunt about this. Basically, 205 is make or break. So 205 is make or break. If you see 204, 205 holding up, reacting as a strong support level, it's going to rocket and it's going to start to fill that gap at 220, 204. Based off of history, based off of trends, I'm seeing some patterns where a recovery is expected. That's what I'm seeing. But just understand, if we go below 204, cracks and reacts as a resistance, it's going to sell off hard. Now, how low will it go if it drops under this 205? Let's take a look at the chart here and identify some support. I would say it would go to about 190. It would go to about 190. There's a gap to fill at 191. There's another gap to fill at 187. We should see some sort of bottom in between that range for a nice little spike to fill the gap above. So in terms of calls, I would wait for 187 to 190. If it bottoms at 205, then it's going to rocket back up to 222 first. In terms of puts, 222 is your best entry. 205 is make or break. If 205 holds, it goes to 220. If 205 cracks, it goes to 187 to 190. That's what you need to understand about Tesla. 205 is make or fucking break. In terms of Netflix, what I can say about Netflix is I would short the first red day. That's what I would do. And this is what I want to bring awareness to. This is previous support with big upside potential, so it's likely going to react as big downside potential and turn into resistance. The best fucking level would be right here at 290. 290, 288, that'd be your best level for puts. 292, right around that zone. Right now, all I'm really going to say is just wait for it to have its first red day. When it has the first red day, scalp put options at the previous closing price. So just keep track of the closing price every single day. Watch it market open. If you see it turning red, reacting bearish, scalp the put options. First red day put options, very simple play. In terms of snow, for snow, I'm waiting for put options up here at 188.91. I'm going to sit on the sidelines for that. This is the make or break support level, 167.54. In terms of Roku, I want to buy puts so badly. Hopefully we can get that best entry. I'm telling you, man, 59.39, 59.39. Put options on Roku. Those will print. We just got to wait for it to get back to the best price. Just like SPY has been doing, Roku has been having consistent gap close reversals. Gap to fill right here, fills the gap, has a reversal. Gap to fill here, fills the gap, has a reversal. Gap to fill here, fills the gap, has a reversal. It's consistently pushing for new 52-week lows. It's consistently filling when it does fill gaps. It likes to consistently top and have a reversal, which is opportunity for day trade scalping and also opportunity for swing trading if you get the bearish confirmation on the daily like this once the gap fills, right? That's our swing trade confirmation, which is not determined until the market closes. In terms of stocks that are just interesting to me and on my radar, Limit is a little interesting. I'm just watching it for now. I still think it has a little bit more upside potential before the next upcoming crash, but not too much upside potential. I'm going to keep an eye on CVNA. This just hit new 52-week lows at $15. Also going to keep an eye on AMD. Those are the top option plays. Going to keep a close eye on SPY is the number one play. Going to keep an eye on Netflix and Tesla. Those are the main ones. That Roku play will be very good. We just got to wait for the best level. So with that being said, if you want to be a part of Trader Society, that's going to be the first link down below in the description. If you want to join Trader Society, now is the best time to be joining. You could sign up. It's a one-time fee. It's lifetime access to the program. It's the first link down below in the description. We have people who are absolutely crushing it within Trader Society. I'm telling you, man, we have some very consistent people who are getting very consistent results using the unique gap trading strategies that I've created, along with the risk management, position sizing, and mindset training that is taught within the program. For example, I want to give a big shout out and honorable mention to Philip. He's been growing his small account, and his style of trading is to scalp. Just like me, he gets in and out very quick. And what he found that works best for him is he's been doing expirations that aren't zero dates. He hasn't been doing the most volatile same day expirations. He's been doing expirations that expire the next day, and that's been working for him. And he's compounding his account with small gains as they're adding up. I really like the look of this chart. The look of this chart overall, it's not going up like super crazy day by day, but it's not going down. It's barely going down super crazy. So like there's not massive spikes. I mean, right here, this was a massive spike. Right here, this was a massive spike for a short period of time. But for the most part, based off of how this chart looks, it looks like it's steadily going up over time with very small pullbacks. That is the best portfolio to have. Something that is consistently pushing higher. Every single week, every single week, it's going up a little bit more every single day. And then as time goes on, it compounds exponentially. What you don't want to have in your portfolio is massive spikes and massive pullbacks, especially the massive pullbacks. You want to keep it conservative and steady. But a 200% return within a month, that's absolutely insane. And just do your best to keep it. Don't go taking big risks. Keep doing what you were doing to get you there. Just eliminate big dips. This right here, that's like a bigger dip. You don't want that. You don't want any big dips. Just keep it small and steady and keep the wins consistent. And, the small gains will add up within time, and focus on the high win rate as well. So, if you do want to be a part of Trader Society, I'm telling you, we're absolutely killing it, man. Some of the people in here have been giving me amazing ideas. Dimitri, Stanimal, they gave me great ideas on Tesla, and then I had my own views on it as well and why I was bearish. And it worked out phenomenal, man. This short on Tesla by buying Tesla Q at $49, it just ripped all the way to 54. Such a great play. But if you want to be a part of it, man, you get access to the Discord, you get access to the real-time trade alerts, you get access to the community, the networking opportunities, direct messaging one-on-one with not only me, but the members within the community. You get access to the video lesson library, and there's a lot more to it. So if you want to check it out, that's going to be the first link down below in the description. I will see you guys tomorrow live towards market open.